All right, today we're going to pop the hood on a tech giant. We're basing this whole breakdown on some fantastic analysis from HDIN Research. And what we're going to do is deconstruct Tencent's 2025 performance. Why? Well, we want to figure out one really crucial thing. How exactly is this company re-engineering itself for the future of AI?
Okay, so first things first, let's talk scale. Just to set the stage, in 2025, Tencent brought in, wait for it, $104.6 billion in revenue. I mean, just try to wrap your head around that number for a second. But you know what? The real story here, it isn't just about how big that number is.
Nope, it's a story about a fundamental pivot. You see this annual report cover? It's basically signaling a whole new chapter. The company is completely re-engineering itself, right from the ground up, to become what they're calling an AI-first powerhouse. So that brings us to the big question we're tackling today. How on earth are they actually pulling this off?
Okay, so to really get a handle on Tencent's strategy, you've got to think of the whole company like a machine that's running on two very different but totally interconnected engines.
So on one side, you've got what we'll call the cash cow engine, right? These are these super stable, incredibly profitable parts of the business. Think gaming, social networks that just churn out enormous, reliable piles of cash. Then on the other side, you have the growth engine. This is the high-octane, future-focused stuff. We're talking AI-powered ads, cloud services. And here's the most important part. The cash cow is literally funding the growth engine's acceleration. One pays for the other's speed.
So let's take a closer look at that cash cow, shall we? The whole value-added services part of the business pulled in over $51 billion. That's up a very healthy 16%. But here's the really cool part, the thing to watch. That slice for international games? For the very first time, it absolutely smashed past the $10 billion mark. That is a massive sign that their global push is really starting to pay off.
All right, now let's talk about that growth engine. And the absolute star of the show here is marketing services, basically ads. This was their fastest growing major business, jumping a huge 19% to over $20 billion. And what's the fuel in this engine? Come on, you guessed it, it's AI. And it's not just ads. At the same time, their cloud business, which is tucked into fintech and business services, saw demand for AI stuff push its growth to nearly 20% too.
And look, this quote from their report, it really says it all. The key thing to understand is that they're not just cramming more ads in front of you. No, they're using their own AI model, it's called HDIN, to make the ads way smarter and more effective. And what does that mean? It means they can make more money without totally wrecking the user experience. It is the classic definition of quality over quantity.
So, okay, we know the engines are powerful, but the next logical question is just how efficiently are they running? And this brings us to a really fascinating part of the story, how Tencent is changing its whole business model, shifting away from just making money off of user eyeballs to making money from the technology itself.
But before we get into that, let's quickly break down a term you're going to hear, gross margin. It's pretty simple, actually. Just think of it like this. For every single dollar Tencent makes, the gross margin is the amount, the percentage, it gets to pocket after paying for the direct costs of making that dollar. So, yeah, a bigger number is always better.
And here's the punchline. Tencent's overall gross margin went from 53% up to 56%. Now, I know what you might be thinking. 3%, what's the big deal? Well, at the scale we're talking about, a 3-point jump is absolutely massive. What it really means is that their profits are growing way faster than their sales. That machine is getting a whole lot more fuel efficient. This jump in margin, this is the ultimate proof of that big shift we were just talking about. The writing is on the wall. The company is moving away from just monetizing traffic, which, let's be honest, has a ceiling, and they're moving towards monetizing high-margin tech, like smarter AI-driven ad pricing and super scalable cloud services. And that, my friends, is a much, much more durable way to build a business for the long haul.
Okay, but it can't all be sunshine and roses, right? No good analysis is complete unless you look at the warning lights blinking on the dashboard. And this incredible AI-powered transformation, well, it definitely doesn't come for free. There are some serious risks involved.
So, what are these hidden risks? What are the things that could potentially jam the gears of this powerful machine?
Well, the analysis really points to 3 big categories. First up, you've got the usual suspects, geopolitics and regulation. Things like export controls are a big deal. Second, and this is huge now, is AI ethics and data security. But the one that really stood out, the most revealing one, is the one in the middle. For the very first time, Tencent actually listed organizational and talent management as a major risk. Think about that. That tells you just how much internal strain there is in trying to pivot this massive ship toward an AI-first future.
And believe me, these risks, they have very real, very quantifiable costs. In 2025, one-time costs for things like litigation and compliance hit around $50 million. Now, to put that in perspective, the year before, that number was less than $500,000. That is a gigantic leap, and it just shows you the rising price tag of playing on this complex, global, and technological stage.
So when you put it all together, you've got these powerful new engines on one side and these pretty serious risks on the other. What does the road ahead actually look like for Tencent? Well, the company seems to believe its competitive advantage for the next 3 to 5 years rests on 3 core pillars. Pillar number 1, just absolute sheer scale. We're talking nearly $12 billion a year on R&D. Pillar 2 is this really clever self-funding R&D loop. It's like a virtuous cycle, where their AI investments directly make them more money, which then funds even more AI investment. And finally, Pillar 3, a rock-solid balance sheet with almost $15 billion in net cash. That gives them the flexibility to handle pretty much any storm or jump on any opportunity.
And it's interesting. Their long-term vision isn't just about maximizing profits. They've made something they call sustainable social value a central part of their strategy. This means they're funding things like basic science research and pushing for carbon neutrality. And this isn't just fluffy PR stuff. It's a strategic move to help them earn and keep their social license to operate all over the world.
So, if there's one thing to take away from all this, it's this. Tencent is in the middle of a fundamental re-engineering of its very core. It is transforming from a giant that monetized traffic into a true technology powerhouse. And that means the big question we should be asking about its future is no longer just how big is it, but rather, what is the quality of its future growth?
This entire deep dive was made possible thanks to the really comprehensive analysis from the folks at HDIN Research. If you want more in-depth analysis like this, you should definitely go check out their website. Hey, thanks for joining us to pop the hood and deconstruct this incredible machine.